In this video, we are going to talk about how to start and use a bank account and other services from a bank or credit union. Now, first of all, banks or credit unions are called financial institutions. These financial institutions offer a wide range of products and services, and they help you manage your money. They both accept deposits and they also loan money out to people. So they offer checking accounts and savings accounts, and they may also offer things like credit cards, car loans, personal loans, mortgages, and other products and services. Both banks and credit unions are regulated by the government, and you can rest assured that they are insured to keep your money safe. Now, there are two main types of products and services available at financial institutions. The first one is deposit products, and these include both savings and checking accounts. So let's start with savings accounts. Savings accounts are used to set money aside for use in the future, saving your money. So money in a savings account earns a small amount of interest, and you can use a savings account to build your savings by depositing money into the account and keeping it there to earn interest. Savings accounts are designed to save money for the future. They're not meant to be used for frequent withdrawals. Checking accounts, on the other hand, are transactions accounts, and these are used for depositing and taking money out frequently. Money in a checking account may earn interest, but the checking accounts don't usually earn interest. These checking accounts are designed to be used frequently for multiple transactions. You'll be depositing money in them. You might be paying bills with a checking account. You'll definitely be making purchases with a debit card or check, and you'll be accessing cash from a checking account. Now, the second category of product or service available from a financial institution is credit products. And credit products include credit cards, lines of credit, installment loans, and mortgages. The first one, credit cards, are a revolving credit. You can borrow money over and over again up to your credit limit as long as you make a payment on it every month. A line of credit is another form of revolving credit, and this allows you to borrow money up to a certain amount. Installment loans are loans repaid in equal payments over a number of months or years. Mortgages are loans secured by your home, usually to purchase a new home or refinance an existing mortgage. So now I'm going to walk you through a few other products and services that don't fit into those first two categories. One is check cashing, and check cashing is when you go to the bank with a check and ask them to give you cash in return. So you're converting a check into cash. Money orders are similar to checks, and they can be used to send money, such as when you want to pay your bills. Prepaid cards are cards that have a balance on them that you can draw on to make purchases. And we're going to talk a little bit more about prepaid cards later in this video. Debit cards are used to access money that is in your checking or savings account. And cashier's checks are checks that are guaranteed by a financial institution. Now, you've probably heard of ATMs. ATM stands for Automated Teller Machine. And these are machines that can process a variety of banking transactions. You've probably deposited money into an ATM. People can make loan payments via an ATM, and you can always withdraw cash from an ATM. You can also use ATMs to transfer money between accounts. ATM cards are cards that are used at the ATM for various account transactions. You might also be able to make some purchases with an ATM card. Online or mobile banking, including bill paying services, are used to manage your accounts using the internet or even just access it on your phone. Person-to-person payments, also known as P2P, these are apps or other web-based services that you can use to transfer money to somebody else. And then remittance transfers is when you move money to a person or a business in another country. Now, how do you go about opening a savings or checking account? There's actually several ways to do it. You can open an account online, but right now I'm going to talk about how you might open an account in person. When you do it in person, you'll need to expect to complete an application for a new account. You'll also need to verify your identity. And in order to do that, the bank might ask to see some things from you. For example, they might ask to see your driver's license, or if you don't have a driver's license, they might ask to see your state ID card. They might ask to see your U.S. passport or military identification. Now, if you get there and you don't have what you're being asked to show, ask them how else you can verify your identity. If your address is not the same as shown on your ID card, you may be asked for proof of your current address, and you can show them a recent bill or a copy of your lease to help prove that. Another thing you'll need to do when opening a new account is make your first deposit. Now, how you pay that first deposit and the amount that is required for your first deposit might vary according to the institution. Typical amounts range from $25 to $100. Check with the financial institution where you plan to open your account. You'll also need to sign some documents, including a signature card, and you'll need to activate your account tools, such as your online or mobile account access and debit or ATM cards. If you don't understand how to use online or mobile access, ask for help from a customer service representative right there at the bank. Now, these days, most banks will let you apply online. The process is somewhat similar to what I just described, but everything will be completed online instead. The website for the bank will give you step-by-step instructions for opening a new account. When you open a new checking account, you may get an ATM card. An ATM card is not the same thing as a debit card. It allows you to use the ATM for various account transactions, such as taking out cash. You may or may not also be able to make some purchases with an ATM card. Now, a debit card, on the other hand, this is known as a bank card or a check card, and when you use it, money is taken directly out of your account. It's not the same as a credit card or an ATM card. Now, checks are documents that you complete that tell your financial institution to pay money from your account to someone else. That other person that you're paying is called the payee. Some checking accounts do not use checks, and they would be called checkless accounts. You'll also have a username or other information about how to create an account for online and mobile banking. An overdraft can happen when an account transaction goes through even though you don't actually have enough money in your account to cover the transaction. Financial institutions will often offer programs to cover overdrafts that are caused by ATM card and debit card transactions. Some tools that will help you simplify your life and help you to avoid missing payments are direct deposit, automatic bill payment, and automatic debit. Direct deposit allows your money to be safely and securely deposited into your account at a financial institution electronically. With this feature, you don't have to worry about finding time to go to the bank and make the deposits yourself because the company who's paying you will deposit it directly into your account for you. Both automatic bill payment and automatic debit can help you stay on time with your bills, but you've got to make sure that you have enough money in your account in advance to cover the payments. Automatic bill payment lets you schedule and send payments electronically through your financial institution. You can have the payments be one-time payments, or they can be recurring payments that happen on a schedule, such as once a month or every 2 weeks. Automatic debit is another electronic payment option, and this you give permission directly to a company, such as a merchant or a lender, and they take payments from your bank account one time, or they might do it every few weeks or every month on a recurring basis. There are also newer technologies called person-to-person or P2P. These are payments that have become very common ways of paying other people. Mobile applications, or what we call apps, and other web-based services allow person-to-person money transfers. The most popular ones include Venmo and Cash App. Typically, users link the mobile payment system to their bank accounts or credit card accounts, and then they transfer funds to other people who are also users of the same app or web-based service. So for example, if you and I go out for lunch, you might pay the bill and then I'll pay you half via Venmo. Using an app for P2P payments is one way to handle everyday transactions with other people, such as paying a babysitter or reimbursing a friend for lunch. There are different P2P systems, and there are important differences in the way they work. For example, one might let you transfer money after logging onto a website. Another option might let you transfer money by physically touching your phone to another person's phone. Keep these things in mind if you are using P2P apps or thinking about using them. One thing to keep in mind is this through a federally insured financial institution? What fees do they charge? What privacy rights do I have? And what is the funds availability policy? You also might like to ask about your rights and dispute resolution. Now, there are also things called mobile wallet apps. A mobile wallet is a type of mobile app that some people like to use along with a debit card. You enter information from your debit card right into the app, and then you only use your phone or your mobile device to make purchases at the point of sale instead of pulling out your debit card. Finally, there are also something called prepaid cards. A prepaid card is different from a debit card. A prepaid card is not linked to an account at a financial institution. Instead, you are using money that you've loaded in advance onto the prepaid card. And there are different kinds of prepaid cards. There's a reloadable prepaid card. There are payroll cards. There are EBT cards, or electronic benefit transfer cards. There are college or university identification cards. And then there are prepaid cards for specific stores or public transportation systems. Hopefully, the information that we've covered in this video will allow you to make the right choices for your finances. If you have any questions, make sure to seek answers from trusted sources and get multiple opinions.